I just read an article on the Financial Times that echoes what Greg and I have been saying all along. You need to know that our economy is not in a good place. In fact, the opening line of the article is, risk of government shutdown adds to concerns that the American consumer is about to crack. Crack. The American consumer is about to crack, you guys. I agree. Today I'm going to break down that article and share with you some key takeaways that you should know. So stay tuned until the very end. Very eye-opening video I have for you today. Now, the first thing worth noting is that there are many strikes taking place, in particular in the land I grew up in the Midwest. CVS workers are striking in Kansas City. United Auto Workers, big story going on right there, are striking in Flint, Michigan. And in particular, they're fighting against the top 3 domestic car makers. The labor action shows very little sign of resolution, so keep a close eye on that story. Now, moving out west, tens of thousands of hospitality workers are threatening to strike against Las Vegas casinos and hotels, one of my favorite places to spend time, in something that could massively disrupt the livelihood of the Las Vegas Strip as we know it. Crazy stuff going on right there. Follow those closely. Next, we have rising energy costs. I don't know about you, but I'm seeing it in my bills right here in Florida. Florida power and light, baby. Another catalyst that's covered in this was the expiry of pandemic-era fiscal support. It hit household budgets. Many people either fought to keep their business alive with this support, and others, as I've read, and you've probably read as well, were simply living off the funding. That is a very dangerous game that's about to catch up with everybody right now, and there is a trickle-down effect, so be careful. There's a chance the economy is way weaker in the fourth quarter than in the third quarter, said Ian Shepherdson, who is the chief economist at Pantheon Macroeconomics. Wow. Another danger stems from Washington, where a U.S. government shutdown that could already be underway depending on when you're watching this video, is looking to put hundreds of thousands of federal workers on furlough while also delaying the collection and publication of data needed by the Federal Reserve to fully assess the economy's health. What? We can't get data on the economy's health right now? This means we are literally flying blind in terms of getting crucial economic data from the government. But if you ask me, and you look at our last videos, we already are getting bad information. And that's why Greg and I started Tag Economy. Tim and Greg tag team the economy. Because we're forward thinkers and business owners who plan ahead and tell you exactly the way things are without sugarcoating. In fact, just so you all know, I cut out sugar earlier this year. It's one of the best things I've ever done. I'm healthier than ever. I'm more focused. I've lost 20 pounds. But enough about me. Let's get prepared to get you guys ahead of these tough times. Continuing, in October, we have the expiry of the coronavirus pandemic era relief for student loan repayments and also childcare subsidies. Very big story there as well. This will be yet another hit to financially vulnerable households and once again, cripple some consumer spending. Then, one that hits hard for me, with 3 drivers in the family, is that oil prices are nearing $100 a barrel after Russia and Saudi Arabia agreed to keep restricting supply. But again, I'm not selfish. I'm not looking at my own bills here. So let me tell you how this impacts you. When oil prices go up, most consumer goods go up as well. Why is this? Let me explain. Because the transportation and trucking costs that go hand in hand with getting things from A to B are going to be more expensive with higher oil prices. Getting goods to the shelf costs more, so when you get to make your weekly run for chips and salsa for the football weekend, you'll be paying more for it. I just did. Vikings are 1-3. Terrible. Take all these factors, put them in a blender, mix them up, and what you get is not just a poorly made tasting cocktail of economic mayhem, but a complete slowdown in consumer spending. Do not recommend you make that cocktail. Ugh. Now let's talk about savings. Americans are estimated to have fully run down the balances of their savings in this quarter, according to the San Francisco Fed. That is scary. We're running out of savings, we're living on fumes, and now look at this. Delinquencies are on the rise for credit cards and auto loans. Small and medium-sized businesses are also feeling the pressure. A new quarterly survey by Morning Consult showed with many reporting shrinking sales and little expectation for improvement. Well, we've said it before, and I'll say it again. Tough times are right around the corner. That's why we do this. We are real people with businesses who have a pulse on this. Higher energy prices are going to drive up consumer prices. And if this auto worker strike does not come to a head, vehicle prices are also going to go up once again as well. That's scary. Now, that's just not my personal take, but it's one also shared by Ballerina Yeruchi. I hope I got her name right. She's the chief U.S. economist at T. Rowe Price, who also went on to say this. Small shocks to the economy can really bring inflation back up again. And as a central banker, you're going to be worried that if you keep getting these upside shocks, what is that going to do to inflation expectations? And that's a perfect segue into what you can do to protect yourself right now. Central banks, what they're doing right now, are buying incredible amounts of gold. In fact, last year alone, they bought more gold than any year since 1950. Incredible stat right there. That tells you everything you need to know and where you need to put your money. Central banks added 55 tons to global gold reserves in July, just this July. China and Poland are taking part, both adding around 23 tons, while Turkey remains an active buyer. Central banks buy gold because it's the world's favorite safe haven, because it retains its value against volatile currencies or falling bond prices. Simultaneously, investors don't need to rely on any particular issue or government to trade gold, right? This thing right here, this right here, Pamp Swiss, covered this last video, is very, very tradable. You do not need to rely on currency. That is fake. No fiat currency's ever made it. And that's what Greg and I have been doing. We've been buying both physical gold and silver, as well as precious metals inside of our IRA, which you can learn to do if you fill out the form below. Because when the economy takes a beating, precious metals prices go up. Insulate yourself by putting 5 to 20% of your savings into metals, and that's a great way to diversify your portfolio and gain assets that thrive when others dive. If you look at our other uploads, you'll see people like Robert Kiyosaki doing the exact same thing. In fact, the Rich Dad Poor Dad investor is predicting huge returns on precious metals in the coming year, and he's lost all confidence in the stock market. I highly recommend you check out our past video coverage on Robert Kiyosaki. They're mind-blowing. Below this video, there's not only a quiz, but an educational site that will teach you more about investing in gold and silver. Feel free to take a look at it and find a company that fits your needs. If you have questions, you can also hit us up. Feel free to subscribe as Greg and I tag team the economy, and we will keep you updated and give you real economic data without any sugarcoating. And you guys know, I told you earlier, because I quit sugar. Thanks for watching, and I'll see you in the next video.